Well, time to move on then. Medicure, that's a stock in focus. I'll tell you what, in this year, we talk about being a good year. The stock has given you returns of more than 75% in 2024 so far. IFL Securities, they in their recent report suggest that the Indian medical devices industry is expected to clock 11 to 12% CAGR over the next few years. Discuss the opportunity, what it means for the company. We're joined by Mr. Himanshu Baid, the Managing Director at Medicure. Hi, Mr. Baid. Good morning, and thanks a lot for joining in. You know, I recall a couple of Christmases ago where I called you up and I said, I want to understand the opportunity. And you said, Nigel, the opportunity is very, very large. And then, in fact, we further got into the business. And from there, I think your stock price has moved up 3 or 3.5 times or thereabouts. The opportunity, though, is something that the street is excited about. Valuations, you can argue that maybe the stock is not very cheap. But let's focus on the opportunity first. The Chinese medical devices exports, well, they are clocking around 75 to around $100 billion odd. India, I think, is at $4 to $5 billion. How do you see exports moving ahead with regard to the industry panning out? And also, Trump is coming into power in 2025. It's supposed to present an opportunity to India versus China. Tell us more.
So, thank you, Nigel, for inviting me. Good morning to everyone. So, I think, India, if you see 2-3 years ago, exports out of India were just around $2 billion. So in 3 years, we have seen it growing from $2 to $4 billion. And subsequently, the import growth has kind of deaccelerating. So there is a huge opportunity because of this PLI scheme which came in, regulations and, new medtech parks. So a lot of medtech manufacturing is now happening in the country. So as we speak, more than 3,000 medical device licenses have been given for companies to manufacture products in India since the industry was regulated. So it's a big uptake, in manufacturing in the country. And I see exports growing maybe around 15 to 20% CAGR for next 5 to 6 years because a lot of manufacturing has started. And I think there's going to be a ripple effect for local market as well as for export markets. Now, coming to the new administration in the US, I think, they will look at China very closely. And I think there's some tariffs coming on Chinese products already. Some have been announced and some are going to come maybe in course of time. If India gets reciprocal tariffs, even if it comes, I think the custom duties in India is pretty low right now on import of medical devices. It's between 7.5 to 10%. So I don't think even if Indian products are taxed in US, it's not going to be very high. So I think we have a lot of potential going forward. We're already working very hard on this, getting more FDA approvals. We started working on this US business a couple of years ago. So I think now, we are seeing some, new contracts been thrown to us. So I think we are very bullish about the US in coming years.
Okay.
And I'm pretty sure that more outsourcing will come to India in next few years.
Just to follow up then, from $4 billion approximately, as you said, we have doubled in the last 3 years. By 2028, should we be in that vicinity of around $10 to $12 billion for the industry? Is that a possibility? Point number one. And for you, Mr. Baid, I think in the coming year, you're guiding for $2 to $3 million of US revenues, right? But the opportunity is large. So in the similar time span, next 4 years, what should this number look like for you?
See, Nigel, if you remember, we talked last year about it and, I guided for $15-20 million initially. But I think now we are looking at a much larger number. Probably we could hit between $20-30 million, looking at the new opportunities which we see in front of us right now. So definitely the number is going to change. But let's say next few months, we are going to know more, have more clarity on that.
And the industry goes to 10 billion in the next 10 to 12 billion. Should that be a fair estimate?
I'm pretty bullish about it.
Got it.
Okay, well, lots and lots of room to grow, really, right? I mean, in that sense. Good morning, Mr. Baid, Prashant here. And Nigel, you were talking about the number of X's it's grown, right? I was just looking at the price chart. It's up 10 times in the last 4 years. 10x.
Phenomenal.
10 bagger, literally. So, Mr. Baid, opportunity is big. Since we're talking very basic, fundamental things here, let me ask you two very basic things. One is, an industry, medtech as an industry, for an outsider, it would seem like India is the big market, right? Because it's like import substitution. Because, most of the machine, you go to any hospital, most of the medtech, the equipment, at least the high-end equipment is all, either it's a Johnson or it's a Siemens or it's a what have you. So that's the technology part of it. Consumables, the gloves and the this and that, the syringes, all those, of course. I mean, I think but that's at the lower end. So just give us a sense. Is India the big market? What should investors really have their what should the focus be? How fast the Indian market is growing, or really, I mean, this export opportunity? Go on.
So if you look at Indian imports last year were around $8 billion across different categories of products. So in my view, this import is going to come down to maybe, let's say, next 4-5 years to around 4 to 5 billion. And that is going to be substituted by local manufacturing. And as we see, local manufacturing is already picking up. And plus, whoever is manufacturing locally, and if the technology is high end, let's say, in terms of manufacturing, I think the exports market open up simultaneously. And that's the reason. So there will be a double whammy impact, that imports will go down, exports will increase. So almost we will see $8 to $10 billion of new manufacturing happening in India for India and for export markets in the next 5 to 6 years. So that is where I see industry. And in fact, we have been discussing this with the government, and government is also pretty much, in tandem with the numbers we are talking about.
Okay. And this would be, I mean, the export part, right? Is largely to the developed market. Is that going to be, I'm not talking about Medicure, but the medtech industry here, the Indian industry, not MNCs making here, but the Indian homegrown companies. Will that be on the consumable side, or do you see it moving higher end, high tech as well, technology driven, which are of course going to be higher value and margin accretive?
So basically, India is still at low to medium end of the technology. And I think when you look at India, India is not 1.4 billion people. And I think India is much more bigger market because Africa, Middle East, Southeast Asia, Latin America is all serviced by India now. And if we have similar, let's say, technology products coming out of India to those markets, I think that is a huge opportunity for Indian companies out there to address these markets. And other than that, of course, developed markets are there, Europe and US, which are going to take its own time. But these are, let's say, easy wins and sure wins, in near future. And I think India is still in the low to medium tech. But if you look at companies like, bigger companies like Siemens, GE, Philips, they have all set of manufacturing facilities in India. So all of them are now exporting out of India to at least 40, 50 countries. So that play area is also increasing in the high-tech space also.
Mr. Baid, hi. So now we've discussed the opportunity, we've discussed what India is doing, what the industry is doing. Let's come to specifics now. For Medicure, you've been guiding for about a 24% growth rate. Margins have been fairly healthy at 27%. You also, I think, mentioned on a recent analyst call that you're looking at technology tie-ups with perhaps larger global medtech brands. So where is that whole contract manufacturing opportunity? Where are you on those conversations? When should we expect something to come through? And an outlook on margins, whether you can improve them even higher from the current 27%.
See, I think we'll continue the guidance for 22 to 24% for rest of the year. So we are very, optimistic about that. You've already seen first 6 months, we have been close to that number already. And I think on the contract manufacturing side, I think things are, looking quite bullish right now. So we have been talking to a few players right now. And hopefully in the next few months, and I think the change in government in the US, I think the larger contract manufacturing opportunities out of the US right now. So I think as things, pan out in the US in the next few months, we will see a lot of action out there. So it's a wait and watch situation, but we are fully, aligned with that, and we are working on that. And we're looking also at other opportunities, whether we can, look at more technology outside of India and look at acquisition. So that is also another area we are focusing. But again, there's nothing concrete, but as soon as something comes up, definitely, we will let you know.
Okay, so just a quick follow-up to this. Two things. You said two things. One, that you should be announcing something on the contract manufacturing side in the next 2-3 months. It could be with a US company or a tie-up with a US company. Now, typically, how does it work? This obviously opens up a large revenue opportunity, but generally, is this business a slightly lower margin business, or does it retain the very high margin profile? Because you're at 27% now.
See, I think margin would depend on the product category, and definitely. So for us, we are not the cheapest manufacturer in the world. So definitely, that is very clear. So and we definitely would look at margins first also when we look at new opportunities. So I think we'll balance it out. So we are very clear that we'll continue to work on similar margin profile in coming years also.
Okay, Mr. Baid, very quickly before we let you go, last year you did around 1,400 crores and you're guiding for 20-25% growth. At peak levels, what kind of revenues can you do since you're doing some capex? And Mr. Baid, every time you join us, you tease us that there's going to be some inorganic growth. When? Before the end of this fiscal, will we hear something?
I'm not sure, Nigel, about the inorganic part, but definitely see, it's always a work in progress. You continue to look at new opportunities, and you will have to look at it's always a build versus buy situation for Polymed, because we are a hardcore manufacturing company. So we'll have to look at that from a technology perspective, and we'll continue to look out. But on the growth side, Nigel, I think as we are doing some heavy capex in coming years, so the revenue will keep on. Of course, our target is to achieve a 20% growth over next 3-4 years, and that's the number we will guide for in next coming years.
Mr. Baid, I was actually going to ask you why doesn't Medicure make for, say, a GE or a whatever, one of these larger medical equipment companies here? So when you say a contract manufacturing sort of tie up in the next couple of months, we should think on those lines?
So we are more on the consumable side, Prashant. So, for us, the play area is more consumable side. And that is also a very big part of the industry, whether it's in India, outside India, or in the US. So I think our focus area would be more on the consumable side.
And just one thing, that $8 billion market which you spoke about over the next 4-5 years, right?
Yeah.
How much of that value you think will be will come from Indian companies making in India, and how much from MNCs making in India?
I think I would say 50-50%.
Okay, about 4 billion from Indian homegrown companies, and the other from MNCs making out of India, but of course, selling here and elsewhere. Thank you very much. It's a great conversation, Mr. Baid. Appreciate you coming on and talking to us here. And we'll speak again in the new one.